Shakaran. Vivek, it's great. Sankaran, excuse me. Vivek, it's great to have you back on. In terms of the numbers you put out this morning, we were just talking about the strength of the consumer. Talk us through that as you have also had to navigate supply chain challenges, which you've been hearing from so many companies.
Thank you, Morgan. Yes, we feel good about the progress we're making in the company and about the results we delivered. I did hear you talking about the consumer, and the consumer we think is still really strong. They continue. We haven't seen any trade down in our business, which you would typically expect if the consumer was weakening. They continue to be eating at home, in my opinion. I think there's some stability in their behavior, and they're strong. And you're right, there are some, we're having out-of-stock challenges or in-stock challenges, if I can call it, that have continued right through the summer and the fall. But we work to give consumers different choices so that they always have something available. If they can't get exactly what they want, they'll always find something that's available to finish their shopping and finish the basket.
Yeah, I mean, just in terms of, I think about, and this is just one example, but turkeys. I mean, chains such as yours tend to secure turkey supplies ahead of Thanksgiving many months in advance. So just in terms of inventory and your gauge as you look out towards the rest of this fiscal year, especially since you did just up guidance, do you have a sense that in terms of some of the supply chain pain we've seen that perhaps we're peaking here, or is it still too soon to tell?
First, Morgan, it's important for me to point out that we don't have fundamental challenges like we did early days of the pandemic. So people are not going to be short of supply. So there's no reason to panic on that front. I think it's just, you may have to be a little more patient in finding what you want when you want it. But take Thanksgiving and turkeys as an example. What we're doing this year is we're sending the turkeys out to the stores as we get them. And what's very interesting is consumers are picking it up. They're taking it home, and they're buying a lot more of the Thanksgiving products a little earlier. And I think that's going to ease the supply chain from our standpoint, and it's going to ease concerns from a shopper standpoint on having what they need for Thanksgiving.
Hey, Vivek, we're in this environment where investors are asking how supply chain challenges and inflation, in their case, food cost challenges, are going to impact margins, and how technology and productivity are going to offset that. You seem like a really good case study in how that's going to be done, if it's going to be done. Can you just explain how you think that's going to work out?
Yeah, the philosophy we have in our company is that we always need things that we call margin tailwinds. And those are things that are in your control. Managing mix, reducing shrink in a business like ours. When you have so much fresh in our stores, there's shrink, waste that goes with it, and managing that, getting smarter about our promotions, improving the own brands mix in our portfolio, and finding ways to reduce cost. I think those are things that are in our control, and we focus a lot on that. And then we always have to manage pricing on the other side of that coin to make sure that we remain competitive and allow consumers to complete the basket within a budget. And then you mentioned technology. Technology is an important part of what we do. Yeah, go ahead, please.
I was going to ask you about what kind of investment we're talking about, as well as what kind of price you are taking out.
Yeah, so from a technology standpoint, the investments are to drive productivity. I'll give you a simple example. We make a lot of our cut fruit in our store. We make sandwiches in our store and so on. And in the past, somebody would have made it with a history of what they thought would sell on a Wednesday. Today, we use data and data science to come back and say, no, you need to have 6 watermelon bowls ready by 10 a.m. And then you need to go back. And so it's very prescriptive because the data behind it, and the computer keeps learning and gets more precise on what people need to make. And that drives productivity because it's less waste. You don't waste labor making watermelon bowls that you don't need. That's where we find technology is applicable in just about every part of the business to drive that productivity, which we can give back to consumers in terms of growth, in terms of new ideas, new products, and pricing.
Shepard Smith here. Thanks for watching CNBC on YouTube.